Hey Buffy Trades! I want to do a video analysis update of the software sector. We'll start with Microsoft, the largest PSJ holding. Last I checked, this is a wave 1 and a wave 2, a huge wave 3 that is subdivided into 1, 2, 3, 4, 5 waves. This is an ABC correction that ends wave 4 at the 38.2% fib. So above 276 to 272, wave 4 is in. The length of wave 1 places the wave 4 low, says Microsoft should go to 378. And there is a rule in Elliott wave theory that says within the same cycle, if a stock makes a new high in price and a new high on the relative strength index, then a wave 5 has not occurred. Basically, wave 5, which is the last impulsive wave in Elliott wave theory, has to end with momentum divergence. So since on the weekly chart within this cycle from the March 2020 low, Microsoft makes a new high in price and a new high on the RSI, it's a nice piece of evidence that this isn't the top. The length of wave 1 placed at the wave 4 low says Microsoft will make another high and will at least go to 378. So can I tell my broker that, wave 5 has to end with momentum divergence? No, right? I can't. But it's a nice piece of evidence. It's a really useful rule in Elliott wave theory. I believe the length of wave 1 placed at the wave 4 low will take Microsoft to 378. Let's look at some other leaders in the software sector. I'm going to start this video by talking about the leaders because I think the leaders in the software sector are the really important roadmaps that we're going to need for the laggard opportunities. So what are the leaders? The leaders are the stocks that formed this exact same high in in February of 2021 that most of the software sector formed, and we're able to have a strong break above it. So that's all a leader is in the software sector. It formed the February high and it broke above it. Datadog is a great example. It is a 1, 2, 3, 4, 5 wave 1. This is exactly 7 months. This is the exact same chart as Zscaler. It's a wave 1 and an ABC correction wave 2 that ends at the 61.8% fib. So the length of wave 1 placed at the wave 2 low says Datadog will break 199. It will go the length of wave 1 placed at the wave 2 low all the way to 248. I believe we can wake up by the end of the summer and see that Datadog has reached 248. It could have even gone past 248 because in Elliott wave 3 is stronger and faster than the length of wave 1 placed at the wave 2 low. So Datadog is a great piece of evidence. It is identical to Zscaler. They're the same chart. It is a 1, 2, 3, 4, 5 wave 1 down to the date, exactly 7 months. Now an ABC correction ends wave 2 at the 61.8% fib. So if we're above 220, the length of wave 1 placed at the wave 2 low can take Zscaler above 376 all the way to 439. I think like Datadog, that gets hit in the second half of the year. Very aggressively by the end of the summer, we'll see Zscaler in the 430s, and that's going to be very good for a lot of software stocks. So Datadog and Zscaler, they're very useful roadmaps, and they're the exact same chart. Wave 1, wave 2, the length of wave 1 placed at the wave 2 low says we are going to a new high all the way to 439 before a shallow wave 4 and a wave 5 higher. So that is Zscaler. Here is Cloudflare. Look at this exact same, high that was formed in February. We see Cloudflare has exploded above it. I think that one way to count Cloudflare is that this is a 1, 2, 3, 4, 5 wave 1. This is an ABC wave 2 that ends at the 61.8% fib. So if we hold above 76, wave 2 is already in. The length of wave 1 placed at the wave 2 low says Cloudflare will go break above 221, go all the way to 283 for this wave 3 target. So I think for a big price target like that, that's going to take some time. But when we talk about Datadog, we talk about Zscaler, we really get the idea that the software sector can rally over the course of the next 7 months. I think Cloudflare will definitely be joining them, going above 221 all the way eventually to 283 for a wave 3 target. So that's Cloudflare. Here is SEC Limited. This is another example of a stock that forms this exact same high in February and explodes above it. So I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 that ends right at the 61.8% fib. So for a high rate of stock, it's a little tight, but if we're above 119, wave 2 is already in. That means at the very minimum, we're going to go see that we'll hold above 119 and SE will go break above 372. Now that right there is a huge gain, right? That's a huge deal, but that wouldn't be the top. That would be the conservative expectation for a wave 3 is that we break above 372. So I think we'll hold above 119. We're going to go confirm likely in the second half of the year. I think the fourth quarter, more realistically, we'll see that SE has broken above 372. It is confirmed that a wave 3 is in progress, very similar to Digital Turbine apps. That this is also another huge wave 1 and an ABC correction that is ending wave 2 at the 61.8% fib. So just like SE, if we're above 35, I expect that apps will go break above 102 and confirm that a huge wave 3 is in progress. This is a big wave 1. This is an ABC correction where the length of wave A placed the wave B high is where wave C ends. I think we hold 35. The next stop is that we'll go break above 102, confirm a huge wave 3 is in progress. Here's Unity Software. It didn't really form that February high, but it's a huge piece of evidence for Pounder. I think it's a huge piece of evidence for the recent IPO sector because all these stocks are in the IPO ETF. That's where all the correlations come from. Are they in the same ETFs? If so, they're probably going to move together, right? So I think this is a wave 1 and a wave 2. I believe this is another wave 1 and an ABC correction that ends wave 2, where the length of wave A placed the wave B high is where wave C ends. So I think what we're going to see happen is that Unity Software has already put in wave 2. It will hold above 90, and then the next stop is above the wave 1 high. The minimum wave 3 target would be 222. So we could see, a big wave 3 happen, not just for Datadog, not just for Zscaler, not just for Cloudflare. It's all over the charts that the software sector is ready to go. And I think that the leaders formed a wave 1 and a wave 2, but when they go on a wave 3 higher, when they really explode, they're going to take the laggards with them. We'll talk about the laggards soon. Here is Netflix. Netflix is a big streaming giant, and I think it's a lot of evidence for Roku. I think it's a lot of evidence for Disney. This is a 1, 2, 3, 4, 5 big wave 1 and an ABC correction wave 2 at the 61.8 to 78.6% fib. So I think we'll hold above 331. A little tighter would be 351, and the length of wave 1 placed the wave 2 low says that Netflix will go all the way to 818. So here's another example of that rule. We have a new cycle that begins in 2018. Within this exact same cycle on the weekly chart, we make a new high in price and a new high on the weekly RSI. That suggests that this is not a big wave 5, it's a wave 1 and an ABC wave 2 that ended at the 61.8% fib. So I can't tell my broker that wave 5 has to end with momentum divergence, but in Elliott wave theory, we use this as evidence that this is what's called an incomplete bullish sequence. There should be at least another high. This is a 1, 2, 3, 4, 5 wave 1. This is a wave 2. The length of wave 1 placed with the wave 2 low can take Netflix to 818 before a shallow wave 4 and a wave 5 higher. Here is Amazon. Amazon's a big piece of evidence because it's a huge holding of the ONLN ETF. The other biggest holding is Alibaba, but I'm going to be a little more conservative with Amazon than I was in my last video. Usually I start with conservative and I go to aggressive. In my last video, I talked about the idea that this could all be a huge wave 1 and a wave 2 that ended. And while that's certainly a possibility, while I expect that will play out, a more conservative view is that this is a 1, 2, 3, and a wave 4 that ended at the 38.2% fib. So right now, if Amazon is above 2,707, then this is a wave 3 and a wave 4. The length of wave 3 placed at the wave 4 low gives a minimum wave 5 target of 4,862. Now that's a big deal. A lot of people are going to say, well, Amazon has all these, certain fundamentals that are going to make it special, right? And that's probably true, but it's also a huge holding, the biggest holding of the ONLN ETF. Right? So if Amazon bottoms and starts going to 4,800, it's very likely that the entire e-commerce sector is going to be rallying. And I think we're seeing that evidence. So this is a wave 1 and a wave 2 for ONLN. This is another wave 1 and an ABC wave 2. So this goes all the way down to the 61.8 to 78.6% fib. That means that this is not a 1, 2, wave 3 and a wave 4. This is another wave 1 and another wave 2. Wave 4 is usually a sideways bull flag that ends around the 38.2 to 50% retracement. This deeper correction that goes past the 61.8% fib, this dramatic correction is normally a wave 2. This is a wave 1 and a wave 2. So I think we hold 42. We'll start heading to 93 all the way up to 110. For a wave 3 target. So that's a big deal. And I think for some of these e-commerce stocks that we're about to go over, if they don't have a great load to trade against, ONLN holding above 42, Amazon above 2,700, those are going to be very important levels. I think Amazon is starting to show that there is holistic evidence that we're going to see members of the e-commerce sector rally. So what's the other biggest holding of ONLN? It's Alibaba. So ONLN above 42, Alibaba should do well. I think that this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So I want Alibaba in the 160s. I'm going to keep holding it because I know they make opportunities like this difficult. So I take smaller position sizes with growth stocks versus value to compensate for that higher beta. A lot of retail traders want to say, oh, well, this stock's going to be the biggest winner, right? So I'm going to go all in on margin. No, it's the opposite, right? Because the biggest winners have the highest betas. So you don't need to invest, everything to get a nice return with a stock that has a high beta. So I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I think ONLN holds 42. I've talked about the idea of NetEase being a very important chart to supplement Alibaba. I think this is a wave 1 and a wave 2. We're going to go all the way on a wave 3 past 319 all the way to 369. So I'll bring this up that we've seen recently that on the bar chart, long straddle and long strangle screener, we've seen JD and we've seen Alibaba on the screener a lot. So I can't tell my broker that Alibaba's on the bar chart, straddle and strangle screener, but what I've covered in my channel a lot is that stocks that appear on the screener, if they have well over a year of options trading history, a lot of times what we're seeing, if we see that they're on the long straddle and long strangle screener, is that it's evidence that institutions are buying lots of hedges for a large move. I believe that that move for Alibaba will be to the upside. The length of wave 1, place of the wave 2 low, says Alibaba and Baidu, right? A lot of these e-commerce stocks, a lot of these Chinese stocks are going to do very well. We're going to go all the way to 369 ultimately before a shallow wave 4 and a wave 5 higher. It's not going to be easy, but I think it's going to happen. If we look at JD, we get kind of a daily chart view. I've been talking about the 5-year chart with Alibaba. So let's look at JD. It's kind of a, closer term view. I think this is a 1, 2, 3, 4, 5 wave 1 for not only a Chinese stock, but an e-commerce stock and an ABC wave 2. So this is a leading diagonal. All leading diagonals is a rising wedge that is subdivided into 1, 2, 3, 4, 5 waves. I believe this is a wave 1 and an ABC wave 2. The length of wave A, place of wave B high was where wave C ended. I think from this low, we form another wave 1 and another wave 2. So if it were super tight, I think JD above 65 is a great level for e-commerce and Chinese bulls. I think that JD above this low of 62 is a nice invalidation. I think this is all a big wave 1 and a wave 2. This is a small wave 1 and a small wave 2. So I think JD is going to go up to 93 before a shallow wave 4 and a wave 5 higher. The wave 3 target is the 161.8% extension of wave 1. That's 93 before a shallow wave 4 and a wave 5 higher. The length of wave 1, place of the wave 4 low, suggests that JD can go to 105 within this cycle just to complete this big wave 3 in black. So that's JD. I think it's a lot of evidence for the Chinese stocks. Here is Fiverr. We'll talk about the emerging markets too, but I think that there's, with Taiwan semis, with, some of the Japanese stocks even, we have evidence that, a lot of the alpha in this market is going to come from across the globe. I think this is a 1, 2, 3, 4, 5 big wave 1 for Fiverr. This is an ABC correction wave 2 at the 78.6% fib. So what's the problem with Fiverr? It's kind of the same problem with Alibaba. There's not like a clear low to trade against. So I think once again, ONLN holding above 42, Amazon holding above 2,700, that's going to be a very important level. But if we look at Fiverr right now, there's a lot of upside, right? If it just goes and reverses at the 78.6% fib, it can go up to 336, right? And that could just be a huge deal by itself. But in the bigger picture, that's not where a wave 3 would end. Wave 3 could go much further than that. The length of wave 1, place of the wave 2 low says wave 3 can go to 385 before, yes, a shallow wave 4 and a wave 5 higher. So I know it sounds crazy. That sounds, ridiculous. But growth stocks, they don't really do the conservative thing, right? They kind of have the dramatic corrections and then they have the wow rallies. I think that this is all a 1, 2, 3, 4, 5 wave 1 and an ABC correction that ended a wave 2 at the 78.6% fib. ONLN above 42. Amazon above 2,700. That's a lot better than anything that we get from Fiverr. We can't really use, any this wave 1 high of 35. The length of wave 1, place of the wave 2 low says maybe it's best to wait for a small wave 1 and a wave 2 to develop so we can trade against this low of 68. But Fiverr, I think, is a lot of evidence that not just e-commerce stocks, but international stocks, they're going to do well. So while we're talking about international stocks, let me talk about EEM real quick. EEM in the short term, I think it looks something like this. This is a wave 1 and an ABC correction that ended a wave 2 at the 38.2% fib. So this is how I count the bull flag and Elliott wave. If it's a wave 1 and an ABC wave 2 at the 38.2% fib, then whether or not this is a wave A and a wave B, or it's a wave 1 and a wave 2, then what we're expecting is at minimum, the length of this rally placed at this low is going to be the next either wave C or the next wave 3 minimum target of 75. So I think right now, EEM holding above 44 is a great level. I think that this is a great opportunity, and also a lot of the evidence for, the larger, bigger picture rally is if we look at EEM, this looks like a huge nest on the larger degree. This is the big wave 1 and wave 2. Yes, I think this is another wave 1 and another wave 2. And yes, another wave 1 and another wave 2. I know that sounds like I'm just saying 1, 2, 1, 2 over and over, but here's kind of what we're looking for. Basically, most of the stocks around the world, right? A lot of the global indices make this high in 2007, 2008. And what we've seen for the past 10 years, the past 12 years, the past 15 years, the S&P and the NASDAQ, they've exploded above this high, right? They've exploded above this high. I think what's going to happen is that we're going to see the emerging markets. We're going to see a lot of indices for other countries. They're going to do exactly what the S&P and the NASDAQ have done for the past 10 years. We're going to kind of rotate out of the S&P. It's not going to happen in one day, but what we're going to find is that maybe the bigger alpha, bigger than the S&P even, is in the emerging markets. That means that a lot of foreign stocks in foreign countries could do very well. I think this is a huge nest. I think what we're going to find is that this is a massive base, and that the S&P and the NASDAQ exploding above the 2008 high are leading indicators that the emerging markets are going to explode above this high too. I think we're seeing that right now. So that's EEM. So let's look at Square Cash and PayPal. They're in this e-commerce sector. I've talked about the idea that iPay and Visa are great pieces of evidence, but I think for Square Cash right now, there's a lot of kind of previous chart history. One kind of benefit of having more chart history is that you have more degrees in Elliott wave theory. And I think if we look at Square Cash, this is pretty clearly a wave 1 and a wave 2. This is a massive impulse. So I think this is another wave 1 and another wave 2. If we zoom in a little bit, I think that this is a big wave 1 and an ABC correction that ends a wave 2 at the 61.8% fib. I think we're going to see Square hold above 87, go the length of wave 1, place the wave 2 low. So if we look at this exact same chart on PayPal, PayPal is below the 78.6% fib. So far, Square Cash hasn't broken below that yet. I think this is a wave 1 and a wave 2. We're going to hold above 87. The next stop is 289 to confirm that that was a wave 2. We're within a massive wave 3. The minimum wave 3 target is 355 before a shallow wave 4 and a wave 5 higher. So here's PayPal. It's broken below the 78.6% fib. I think we have a lot of evidence from the entire e-commerce sector, a lot of the growth sector. We'll talk about Ark W in a second. We have some supporting levels. I think ONLN above 42. And I think when we look at the Ark W chart, Ark W above 72 is going to be very helpful. Ark itself above 60 will be very helpful. But right now, we don't have a low to trade against. What some Elliott wave theorists will say is when you don't have a low to trade against, wait for a wave 1 and a wave 2 to form. Then we could trade against this low of 118. I personally manage risk with growth stocks up front by taking a half position size and kind of scaling into the sector. I think this is a wave 1 and a wave 2. I think we're going to see that the reason they're making PayPal quite difficult is because in the future, it will be above 310. It will confirm this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take PayPal all the way to 348 before a shallow wave 4 and a wave 5 higher. So the problem with PayPal is that there's not a clear low to trade against, but Square Cash, it's kind of, twin sister does have a pretty nice level to trade against of the 78.6% fib of 87. ONLN has a great level to trade against of 42. Ark above 60. Ark W above 72. Maybe those are supplementing levels. Here's Disney. We'll talk about some stocks. We'll talk about a few stocks that are kind of growth stocks, right? They're kind of software stocks, but they're also kind of reopening stocks. So we're going to talk about Uber. We're going to talk about Disney. We're going to talk about DraftKings as kind of half reopening stocks and half software stocks. Disney is certainly a streaming stock. And I know that they tell us that, all of these streaming stocks are competing, right? But they're in exchange traded funds together. So I think this is a 1, 2, 3, 4, 5 wave 1 for Disney and an ABC correction wave 2 at the 50 to 61.8% fib. So in supply chain, they say competition is the rising tide that lifts all boats. I think that Disney and Netflix and Roku, maybe it won't all be on the same day, but I think over time we're going to see they are going to rally together within the streaming sector. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 50 to 61.8% fib. So if Disney's above 126, wave 2 ended, the length of wave 1 placed the wave 2 low says this is the left side of the base. We're going to have a very explosive right side of the base on high volume. We're going to go above 203 all the way to 254 before a shallow wave 4 and a wave 5 higher. One thing I like to point out about Disney is it's not always, what's going to happen tomorrow. There is a lot of chart history with Disney that says that this is kind of a bigger deal than some wimpy swing trade. This is a 1, 2, 3, 4, 5, a 30-year wave 1. This wave 2 that we had in March of 2020 could have corrected that entire cycle. So we could be within a massive wave 3 on the larger degree, and on the smaller degree, we could be within another wave 1 and another wave 2. We could be within wave 3 of wave 3. So that's a pretty big deal. If we're above 126, the next stop is to go above 203 all the way to 254. Most likely we'll go past 254 for wave 3, have a shallow wave 4, and a wave 5 higher. So like Disney, I think it's a big piece of evidence for the transportation sector, the reopening sector, and even, of course, the streaming sector. This is a 1, 2, 3, 4, 5 wave 1 for DraftKings and an ABC wave 2. I talked about the idea that pin above 33 is a great level. There's a little tight level right now of 17 if we want to say, hey, DraftKings is already put in wave 2. Well, if DraftKings has already put in wave 2, then it won't go below 17.41 for a very high beta stock like that. That's kind of a why bother situation sometimes, but I think pin above 33 is a great piece of evidence. I think Disney's giving evidence, and I think even those airlines are giving great evidence that some of the transportation stocks, some of the reopening stocks are getting ready to go. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. The length of wave 1 placed the wave 2 low. I'm not sure if DraftKings is a software stock, but I think it's going to go break above 74, go all the way to 82 before a shallow wave 4 and a wave 5 higher. That would be a much longer term idea, but stocks don't really do the conservative thing, right? They kind of do the things that don't really seem to make sense. I think that DraftKings going and exploding above 74 all the way to 82, we can't really see why that would make sense now, but I think the fundamentals will kind of play out that way. The length of wave 1 plays at the wave 2 low says we're going to 74, then 82 before a shallow wave 4 and a wave 5 higher. I think it happens a lot quicker than we think. Here's Uber, man, this is a pretty chart. This is a pretty chart because a classical trader could love this and an Elliott wave theorist could love this. We can't really agree on anything as a society right now, but I think we can all agree that this is an explosive pattern. If you're a classical trader, I imagine you love this, right? Maybe not, right? But this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 61.8% fib. Man, that's a pretty bull flag, right? We're not supposed to say the word bull flag because that's, classical trading, but this is a gorgeous bull flag, man. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. This is a beautiful, beautiful accumulation pattern. I think what we're going to see is that Uber is going to have an explosive break above this downtrend. And that's going to be a big deal. It's going to confirm from an Elliott wave perspective that a new impulse is in progress. I think the length of wave 1 placed the wave 2 low says Uber is going to hold above 32. It's going to go to 64. But it's not going to stop there. The real target is 83 before a shallow wave 4 and a wave 5 higher. And if wave 2 is already in, then from a timing perspective, this is from 316 to 208. So actually conservatively, 11 months from now, even 9 months from now, we can see Uber go and explode above 64 all the way to 82. So I think a bigger time horizon would be important for Uber for a price target like 82, but I don't think it's going to be, a very wimpy rally to a new high. I think this is going to be an explosive wave 3. This is a wave 1 and a wave 2. It's really coiling tightly for a massive move. I think that move is going to resolve to the upside. And yes, we've seen Uber on the bar chart straddle and strangle screener recently a lot. So does that guarantee that Uber is going to explode to the upside? No, but it gives a lot of evidence that Uber is going to have a big move. I wouldn't be betting that move is to the downside. I think to the contrary, Uber is going to be evidence for the transportation sector, the reopening sector, and even the growth sector in general that we're getting alpha back in those names. Here's Ark W. I think this is a very important chart for Roku bulls and PayPal bulls and Square Cash bulls and XYZ growth stock bulls. This is a beautiful look at the Cathie Wood ETF Ark W. This is a wave 1 and a wave 2. I believe this is another wave 1 and another wave 2. This is an ABC correction where the length of wave A places the wave B high is where wave C is. So I'll get the scarlet letter on my sweater. I expected the wave 2 would end right around this low of about 120. Okay, it didn't. It broke below that low. Wave theorists get to have stops too, even though I personally manage risk to the downside with position sizing and with option straddles to get that unlimited downside risk. That's something I'd love to talk about later, but we can't really, people just argue with everything, right? If I said the sun was round and the sky was blue, someone would say that that's not true, but this is a wave 1 and an ABC wave 2 at the 61.8% fib. I think we'll hold 72, go the length of wave 1, place the wave 2 low. We're going to have the left side of the base. We're going to have the right side of the base be an explosive high volume base breakout for an entire ETF full of Cathie Wood stocks, right? And that sounds crazy. That sounds ridiculous. But one by one, TWLO, Datadog, Snapchat, Amazon, now crypto. It's almost like the market's trying to tell us, hey, look at those growth stocks. I think we will be looking at them all together. This is a wave 1 and an ABC wave 2. The length of wave 1 places the wave 2 low, says this whole ETF has a minimum wave 3 target of 233 before a shallow wave 4 and a wave 5 higher. It won't be easy, right? But it's going to be worth it, in my opinion. Above 72, there's a lot of upside for Ark W. Below 72, I get called a retail bag holder. So it's a risk I'm willing to take. Let's look at PSJ. PSJ has a lot of software stocks in it, particularly Microsoft. This is a wave 1 and a wave 2. I believe this is another wave 1 and an ABC wave 2 that ends at the 61.8 to 78.6% fib. This is a very pretty view of the software sector. I think 95 is a great invalidation. I think 99 is a little tighter stop. But this is a sector that outperformed the S&P 500 for 6 years in a row before 2021, right? Everyone's looking for alpha. Why don't we look for alpha in that sector that outperforms SPY for 6 years in a row before 2021, right? Past performance is not indicative of future results. But what if that 2021 little blimp was just a pause, right? And now we're going to resume the dominance of the software sector. I think that's going to happen. I think there's a lot of evidence that's going to happen. This is a wave 1 and a wave 2. The length of wave 1 places the wave 2 low says, I'm not going to go all in software, right? But if I don't have exposure to software now, I'm going to need to get it in the future anyway. So why not get it at, kind of the sell-off? But anyway, I think this is a wave 1 and a wave 2. I think we'll hold 95 to 99. And I think this entire ETF full of software stocks goes well past 185. It's going to go all the way to 216 before a shallow wave 4 and a wave 5 higher. That's PSJ. Here's TWLO, right? I don't react to earnings, and a lot of this pop faded, but it's another one, right? Very similar to Datadog, very similar to Disney. A little bit of a change in pace, and there is an Elliott wave principle that says wave 3s often, include a lot of gaps. So I think some of these gaps that we've seen recently in the growth sector, a la In-Phase Energy, a la XPEV, a la Snapchat, they could be signs of a large wave 3 that's in progress. I think a conservative view of TWLO is that this is a big wave 1 and an ABC wave 2. The reason I say that's conservative is because some will say that this entire rally is wave 1 and this is wave 2. We don't really need to make that argument. It's kind of the same result in the short term. I think this is a wave 1 and an ABC wave 2 that ended at the 61.8% fib. I think 151 is a nice invalidation level. Very tight for a high beta stock would be 172, but I think 151 is really a lot more realistic. The length of wave 1 places the wave 2 low says this is the left side of the base. The right side of the base will be a high volume base breakout. We're going to explode above 467. Go all the way to 565 before a shallow wave 4 and a wave 5 higher. It's going to take some time, but if I had to give an estimate, I think from 316 to 215, very similar to Uber down to the date. Those are actually the exact same weeks as Uber, by the way, from March to February. That's 11 months. We could see 9 to 11 months from now. Wave 3 is usually a lot stronger and faster than the length of wave 1 placed at the wave 2 low. We could go past 457 all the way to 565 before a shallow wave 4 and a wave 5 higher. That's TWLO. It's a tongue twister, but it's a beautiful count. Here is Okta. This is a wave 1 and an ABC wave 2 right at the 50% fib. Right between the 61.8% fib and the 50% fib. So I think the 61.8% fib of 167 is a great level for Okta to stay above, right? And this is kind of that cybersecurity side of software. I think there's a few factions within the software sector, social media, streaming. So Okta might be that cybersecurity name. I think this is a wave 1 and an ABC wave 2, right at the 50% fib. I think we'll hold 167 and we'll go the length of wave 1, place of the wave 2 low. Okta is going to go the left side of the base, the right side of the base. Realistically, a lot of these software names should move together. I think TWLO and Okta, they're almost identical. Wave 1, wave 2, the length of wave 1, place of the wave 2 low. Says Okta will go have an explosive base breakout above 294, go all the way to 355 before, 377 before shallow wave 4 and a wave 5 higher. That is Okta. Here is Roku. Roku, we started to get a little bit of love, right? And a lot of things faded today, but I think this is a 1, 2, 3, 4, 5 wave 1. I think the best evidence for Roku, besides the fact that Netflix and Disney look really good in the streaming sector. Netflix and Disney look really good in the streaming sector. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So I don't mean to get excited about Roku. I know showing emotion, right? We shouldn't show emotions, but I like this. This is a 1, 2, 3, 4, 5 wave 1. This is clearly subdivided into 5 waves, right? And a lot of people think Roku is the next Netflix, right? So if Roku is the next Netflix, we should expect it to act like Netflix, right? And right now, a lot of people, they're too scared to buy this, so they're never going to be able to buy this, right? But anyway, I think Roku is a clear ABC correction. The length of wave A, place of the wave B high is where wave C ended. I think Roku holds 125. I think Ark W holds 72. I think we go the length of wave 1, place of the wave 2 low. That's going to take Roku all the way to 605 before a shallow wave 4 and a wave 5 higher. Roku's one of the biggest holdings of Ark the last time I checked, so Tesla might be some evidence for that. Zoom, I think I found a little bit of supplementing evidence for Zoom in the stay-at-home sector. We'll talk about that in a second, but if we look at Zoom right now, right, it's a communication stock, but it's also kind of another example of, a stay-at-home stock that may be, not just the stay-at-home stock. We talk about the metaverse a lot, and I know talking about fundamentals is, we're not supposed to talk about fundamentals, but Zoom could secretly be a metaverse play. We talk about Teladoc. We talk about, some of these stay-at-home stocks. We'll talk about Asana in this video. I think some of the stay-at-home stocks from 2020 are really going to recover. I think that Zoom is a great example of that. 1, 2, 3, 4, 5, big wave 1, ABC correction wave 2. I think another way to count this ABC correction would be a little deeper like this, but right now, the good evidence for Zoom, the best evidence for Zoom is that this is clearly subdivided into 1, 2, 3, 4, 5 waves. And there is that rule in Elliott wave theory that says if we make a new high in price and a new high on the RSI, then a wave 5 has not occurred. So I can't tell that to my broker, but I do believe this is a 1, 2, 3, 4, 5, a clear impulse. This is an ABC correction at the 78.6% fib. I like the wave 1 high right now of 107 being a nice level to stay above. This is all a big wave 1 and a wave 2. That means we'll hold above 107. We're going to go break above 590 at any point in the future. That would be a great return, but that wouldn't really be where we stop, right? Wave 3 doesn't end at the wave 1 high. It goes way past the wave 1 high. So there is this idea that Zoom could go into the 700s. No need to talk about 700 right now, but I think we're going to go hold above 110. The small degree wave 1 high, of 101, and we're going to go break above this large degree wave 1 high of 590. Confirm, yes, this is wave 1, that is wave 2. We're within a massive wave 3 right now, so that is Zoom. Here is Asana. Asana is in the kind of stay-at-home sector. Weren't we all in love with Asana a couple weeks ago, right? Asana is going to take over the world, right? Then it's a fad, right? Retail got scammed. The truth is, growth stocks, the best opportunities, they have high betas, right? They know that retail traders can't stomach getting called a bag holder, so they know they can do, a couple of these 61.8% retracements, right? Netflix has had several of these. Amazon has had several of these in its history. Nvidia, Bitcoin, right? If you want a big winner, you got to have a big stomach. I think this is a 1, 2, 3, 4, 5 wave 1 for Asana. I think that this is good evidence for Zoom in the stay-at-home sector. We could be seeing some love. I know this is kind of a work-from-home stock, but I think this is a big wave 1 and a wave 2. I think Asana will hold 43, and it's going to go above 145. It's going to go past 145, all the way to 168. So we've seen a lot of kind of stocks that weren't really too hated until recently. Now they've started to join the sell-off. And I think what's starting to happen is it's not just like we're bearish Fastly now. It's not just like we're bearish Roku now. Now, if someone's a software bear, they're bearish Netflix, right? They're bearish, possibly Disney. They're bearish Amazon. They're bearish Asana. They're bearish Snapchat. They're bearish Facebook. And it's like, wait a minute, do I really want to bet against all those stocks? Maybe not. I think I actually want to bet on them. I think Snapchat's a good example of 1, 2, 3, 4, 5 waves, a huge wave 1 and an ABC correction wave 2. I think we're going to see Snap is going to hold above 24. This is a wave 1 and a wave 2. Snap can go past 83 and confirm a massive wave 3 is in progress. Then the minimum wave 3 target will be 102 before shallow wave 4 and a wave 5 higher. So I love the social media sector, right? And now it's starting to act as a lot of evidence for the software sector in general, that we're not just betting against Zoom, right? We're not just betting against XYZ, growth stock. We're betting against Facebook now. We're betting against Twitter. We're betting against Snapchat. We're betting against Amazon. And then we kind of start to realize, hey, maybe betting against the software sector is a bad idea. I think it is. I think Snapchat's a good example of that. Here is Twitter. I love Twitter. I know I've really just started talking about Twitter recently, but man, this is very pretty because there's two counts at play. And this is kind of what I was trying to talk about with Square Cash, is that the more chart history we have, right, the more evidence we have from an Elliott wave perspective. That's why there's a much higher risk with recent IPO stocks, because they have a lot less chart history. If we look at Twitter, I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So all that is giving evidence for what's about to happen. Over a year and a half ago, we have evidence that this is a big wave 1 and a wave 2. And now within this cycle, if we zoom in, I think we have evidence that this is another wave 1 and an ABC wave 2 that ended at the 78.6% fib, right? And now we even have Facebook really setting up in that social media sector. By the way, I believe Twitter, Snapchat, and Facebook are all in the SOCL ETF, and that ETF also holds NetEase, Tencent, and Baidu. So that's kind of also evidence for the Chinese stocks. I think this is a wave 1 and an ABC wave 2 that ended at the 78.6% fib. Very tight. Too tight would be 32. A little wider would be 28, but I don't think either of them go. I think this is a big wave 1. That's the ABC correction wave 2. This is clearly subdivided into 1, 2, 3, 4, 5 waves. And yes, it makes a new high in price and a new high on the RSI within the same cycle from the March 2020 low. I think that this is all a big wave 1. This is the wave 2. The length of wave 1 places the wave 2 low. Says Twitter and Snapchat and Facebook, they're going to have big rallies. Twitter's going to go above 80 all the way to 92 before shallow wave 4 and a wave 5 higher. And before you say that's crazy, why is this not just a massive IPO base? This is a base breakout and a retest of the base. It's a possibility. I think that the classical traders are really going to favor that possibility when Twitter is above 80. I don't really want to wait that long. I like to buy stocks when they dip. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 78.6% fib. We're going to have Twitter, we're going to have Snapchat, we're going to have Facebook all rally. And that's probably going to coincide with a lot of the software, a lot of the e-commerce sector rallying as well. Here is Facebook. Facebook's very pretty. Facebook is very pretty. This is a wave 1 and a wave 2. This is a big wave 1 and an ABC wave 2. This is the largest holding, I believe, with Google of XLC. Fun fact, I think that Zoom trades on a lot of communications ETFs, but Facebook trades in all of them. I think this is a wave 1 and a wave 2. I believe this is another wave 1 and an ABC correction wave 2 at the 61.8% fib, because I love Facebook now, because now the bears aren't just betting against Zoom. Now they're not just betting against Roku. Now they're not just betting against XYZ stock. They're betting against Facebook. They're betting against Amazon, right? They're betting against Datadog and, a lot of stocks that I'm not quite sure they want to be betting against, especially Cloudflare. But if we look at Facebook right now, it's like, okay, now you're bearish Facebook. Have fun with that. I think this is a wave 1 and an ABC wave 2 at the 61.8% fib. I think 190 is a great invalidation. The length of wave 1 placed with wave 2 low says Facebook's going to go explode above 384. It's going to go all the way to 466 before shallow wave 4 and a wave 5 higher. I know that sounds crazy, right? Big price targets and numbers are scary, but I think it's going to happen. The length of wave 1 placed with wave 2 low says 466. Believe it or not, is a minimum wave 3 target before shallow wave 4 and a wave 5 higher. It would take some time, right? But this is about a year and a half. And if wave 3 is in progress, then wave 3 is usually stronger and faster than the length of wave 1 placed with wave 2 low. I think we could see a year from now that Facebook is in the 460s before a shallow wave 4 and a wave 5 higher on what is literally a big tech blue chip. So here is Palantir. We're going to talk about some meme stocks too, but I think Palantir right now, it's starting to shape up. Now we're seeing a lot of software stocks, a lot of e-commerce stocks start to do well. I think this is a wave 1 and an ABC wave 2. So 8.90, if 8.90 holds, then this is a wave one and a wave two. If 8.90 doesn't hold, then Pounder is really the big risk with investing in recent IPO stocks because there's less chart history, so there's less kind of confirmation from an Elliott wave perspective. But what I do think is that Pounder is in the same ETF, the IPO ETF, as Unity Software, and I think that's a big deal. I think this is a wave one and a wave two. I think Unity Software is going to hold that low, I believe was 90. I think it's going to rally, and I think that a lot of the IPO stocks in IPO, which we'll look at in a second, are going to rally. So for Pounder itself, if it's above 8.90, I think this is a wave one and a wave two. Pounder has been all over, and I mean all over the bar chart straddle and strangle screener with, and I hate to say this, with a lot of meme stocks. So I don't think Pounder is a meme stock. I think Pounder is a monster. But the financial media is telling us that Pounder is a meme stock. So let's talk about a meme stock. Let's talk about AMC Theaters. But before we do that, let's talk about IPO. I'll make sure we talk about Fastly. Then we'll talk about AMC. And then we'll talk about some other kind of evidence that we have for the sector. But I think if we look at the IPO ETF itself, this holds a lot of Unity Software. It holds a lot of recent IPO stocks like XPEV even, and like Li Auto even. So I think XPEV and Li, there are a lot of evidence with Unity Software that the entire IPO ETF is a big opportunity. If we look at the IPO ETF itself, I think this is a wave one and an ABC wave two. The length of wave A, place of the wave B high is where wave C ended. I think this is a wave one and a wave two. So we're going to have IPO go break above 77, go all the way to 97 before a shallow wave 4 and a wave 5 higher. I think a tight level is 40. I think that's actually a very good level. 40 is right around that 61.8% fib. What we could see, this is a wave 1, this is an ABC wave 2, this is the left side of the base. We'll have a high volume right side of the base breakout. And what we've seen recently, we've seen Datadog, we've seen Snapchat, we've seen TWO, right? We've even seen Enphase Energy and XPEV have nice little gaps. I think there's a lot of writing on the wall. The growth sector is about to do well. Let me talk about Fastly, then we're gonna talk about AMC, just because I think, unfortunately, they've told us that Pounder is a meme stock. We're kind of seeing in the options market's kind of treating Pounder like a meme stock. So we'll talk about AMC, we'll do it. But I think for Fastly, this is a nice piece of evidence that we have that a lot of the recent IPO stocks, a lot of the laggards in the software sector that didn't go explode above this high that was formed in this high that was formed in February, that a lot of the software stocks formed. I think that Fastly is going to go rally the next time that Cloudflare rallies, the next time that Unity Software rallies, the next time that Datadog rallies. We're going to see Fastly join the party. I think it's the ultimate laggard in the software sector. I think this is a 1, 2, 3, 4, 5 wave 1. This is an ABC wave 2. So there's not really a great level to trade Fastly against. 23.50 would be very tight for a high beta stock, kind of similar to Pounder. What some wave theorists will say is wait for the wave 1 and a wave 2 to trade against this low of 23.50. 23.50 is a little tight. I don't hate it as a level, but what I do like about Fastly, it's retesting this high. It's retesting these highs of about 25 to 28. I think that this is all a big wave 1 and a wave 2. I think Fastly will hold above 23.50. I think wave 2 is already in. It'd be nice if Fastly had a little bit of room. It doesn't right now. So what some wave theorists will say is wait for wave 1 and wave 2. For me, I manage that risk up front with position sizing, but Fastly could be a monster. It could be the ultimate laggard, and we have all this evidence from Cloudflare, from Datadog, from Unity Software that the leaders are going to rally. Now I think the laggards are going to join, and I think Fastly is the ultimate laggard. So let's talk about AMC Theaters. Let's do it, because sometimes the financial media can be helpful. And one thing the financial media can do is they can point out correlations that ETFs don't really point out. One example of this is that the financial media has let us know that the precious metals like silver could possibly move together with the clean energy stocks. That's just one example. Another example that was actually quite helpful to me this summer was the financial media was saying that Tesla was going to benefit from the chip shortage. The financial media was saying that Tesla and Qualcomm were going to do poorly from the chip shortage, which I didn't think was true. I thought from an Elliott wave perspective, they were looking like really good setups. But Tesla and Qualcomm, they both traded together in the semiconductor kind of sector, and I didn't realize that until the financial media pointed out that correlation. I think one correlation, unfortunately for Pounder, is the meme stocks. They're saying that Pounder is a meme stock, and that might not be a bad thing. I think AMC and Pounder, if they trade as meme stocks, they'll trade together. And AMC looks like a big wave 1 and an ABC wave 2. It sounds ridiculous, but I think AMC is going to hold above 13. And then I think we're going to see some fireworks out of AMC. We have so much option activity on AMC. I've talked about again and again how important the bar chart straddle and strangle screener is, how important low implied volatility mixed with high open interest is in my analysis. And AMC itself was on the screener a lot in the $13-10 range. It's been all over the screener for the entire fourth quarter with Palantir. And I think that if Palantir trades as a meme stock, it's going to trade with AMC. I think AMC is going to hold above 13. I think it's going to go have meme mania. And I think hopefully Palantir will join it.